Bitcoin has done in the past, it's needed fuel to go up. I mean, monetary supply increasing, risk assets going up, and speculative risk on. Now that worked last year. It was a bounce. The monetary supply is still declining. To me, the risk is tilted towards risk assets going down, the stock market going down, and forcing the Fed to ease because their prices are too much easing right now, and that dragging down most risk assets as we head towards a normal recession. The key test will be, will Bitcoin trade well if the stock market goes down? The point is, it hasn't got anywhere near that test yet. Like I said, everything, Bitcoin was up last year, stock market was up. So as far as interest rates, that's the key thing right now.
Much of the chatter about the Securities and Exchange Commission's long-awaited approval of Bitcoin exchange-traded funds has revolved around how the SEC's action will affect Bitcoin's price. But that's the short-term story. The most far-reaching consequence of the ETF-driven institutionalization of Bitcoin is that it will become extremely difficult for the U.S. to ban the digital asset, enabling Bitcoin to permanently push forward the evolution of how money fundamentally works. However, in a thought-provoking interview, Mike McGlone, senior commodity strategist at Bloomberg, delves into the intricate dynamics of the cryptocurrency market with a particular focus on Bitcoin. McGlone, known for his incisive analysis and unbiased perspective, challenges the prevailing optimism surrounding Bitcoin's potential surge in 2024. He presents a compelling narrative, cautioning against the hype and urging investors to adopt a more measured approach. As McGlone articulates his insights, he underscores the volatile journey of Bitcoin, highlighting its position as the leading asset during the downturn of 2022 and its subsequent rise in 2023. This roller coaster trajectory sets the stage for 2024, a year McGlone views with a blend of skepticism and analytical prudence. He questions the sustainability of Bitcoin's growth, suggesting that the true test of its resilience and market value is yet to come. Let us now dive into the video properly and hear the reasons why McGlone is more bearish short-term than most people.
The launch of Bitcoin ETFs, spot-based ETFs in the U.S., was one of the most extreme speculative frenzies I've ever seen in markets. It's also coming with the stock market all-time highs and the potential world heading towards recession. Certainly have a downtrend in global GDP forecasts, and the U.S. certainly heading that way. And we haven't started easing rates yet. I mean, at least the U.S. has, and many major countries has, and typically takes a long and variable lag to easing for risk assets to bottom. So I think we're in that late stage of, yes, the recession never came last year, it's coming now. I like to watch the Bitcoin to gold ratio because that ratio is usually leads beta. Beta is the stock market. It's been leading on the way up. The last few years, certainly since the peak in 2021, it's been lagging. And now we have a situation where this risk asset, digital gold, which I fully believe in long term, it's got, favorable supply demand forces to make it go higher, is been pumped into the retail space. The key question I like to ask people and investors and anybody in this space now, do we really expect this highly speculative 24/7 high beta risk asset to outperform beta, meaning the stock market, even to go up if the stock market goes down? And to me, that's going to be the big test this year. I think the U.S. stock market is going to go down for a normal recession. Commodities are clearly in a recession. That's my main space. And if that's the case, the leading asset on the way down in 2022 was Bitcoin. The leading asset on the way up in 2023 was Bitcoin. And the risk is it just goes back down again in 2024 with potentially as a leading indicator for risk assets. We can start seeing typical equity weakness for recession and Bitcoin not dropping on a risk-adjusted basis with that, actually maybe staying stable or going up. That would be a good sign. But my point is we have not seen anything but a very high beta, high volatility, highly speculative asset outperform the stock market on the way down and actually outperform on the way up last year. But lately, I've been pointing out it's not been performing like it used to as a high beta asset. And it shouldn't as it becomes more ARB and there's more futures in ETFs. And that's a key thing people have to remember about Bitcoin now. It's in the mainstream. It's not going to trade with the kind of volatility it has in the past. And it's going to probably trade more like equities than gold. And it hasn't shown, like I said, last year, all risk assets were back up and Bitcoin was just back up with risk assets.
McGlone doesn't shy away from challenging popular narratives. He critically assesses the impact of institutional capital inflow on Bitcoin's valuation and the broader market dynamics. His commentary on the hopium driving certain market sentiments reflects his commitment to grounding discussions in reality and empirical evidence. His analysis extends to the intricate relationship between Bitcoin, gold, and the stock market, offering a detailed examination of their interplay and potential implications for investors.
Right now, the issue is the market is priced for an extraordinary amount of easing within the next year, up to 170 basis points. Now it's maybe 160. And that's just the classic. I think it's just silly. But the market's priced for that much easing. It's forgetting that things have changed. The Fed will not ease with the ease it has in the past because of the inflation it created with easing too much. That's the lessons that Fed Governor Waller just said recently, and the market just hasn't figured out yet. So what Bitcoin has done in the past, it's needed fuel to go up. I mean, monetary supply increasing, risk assets going up, and speculative risk on. Now that worked last year. It was a bounce. The monetary supply is still declining. To me, the risk is tilted towards risk assets going down, the stock market going down, and forcing the Fed to ease because they're priced for too much easing right now, and that dragging down most risk assets as we head towards a normal recession. The key test will be, will Bitcoin trade well if the stock market goes down? The point is, it hasn't got anywhere near that test yet. Like I said, everything, Bitcoin was up last year, stock market was up. So as far as interest rates, that's the key thing right now. In the macro, the market's priced for so much ease, which will help keep the stock market elevated. I don't think it's going to get that ease unless the stock market goes down and makes them ease. And that means that's a pressure factor for this highly speculative 24/7 leading indicator risk asset called Bitcoin. Normal Bitcoin movement that's old resistance is probably new support. But again, I'm looking for the indication to see what happens, how it goes. For instance, as we record today, almost all risk assets are down. The key thing I watch when I'm morning come in is the CSI 3000 index. It just made a new multi-year low. So that means wealth leaving that in that deflationary environment in the second largest economy. Equities are declining. And Bitcoin and cryptos are down in an environment. That's my point, is when the stock market and beta goes down, Bitcoin goes down more and has been. And yet lately, it hasn't been going up as much.
A lot of people are expecting the next parabolic move for Bitcoin to start in the months following the Bitcoin halving. I guess you have a different view on this?
Sure, if the stock market's going up, Bitcoin will probably go up. That's the bottom line, Giovanni. It's a known known. Known knowns don't matter in markets. Typically, they're priced in. It's the unknowns that we have to be able to watch. And I think the most significant major force this year in the macro is we have a deflating situation in China, very similar to peak Japan and peak Soviet Union about 30 years ago. That's potentially accelerating. We have the U.S. stock market all record highs, and the market's priced for excessive amount of easing to help keep it that way. Bitcoin's a good leading indicator. Now, if Bitcoin goes up and the stock market goes down, now that's a great sign of a new asset that is, can diversify a portfolio and outperform in different environments. But I expect it's going to just continue what it normally does. Well, the term I've heard from Bitcoin people and crypto people is hopium. My editors don't seem to like that word so much at Bloomberg. I love that word, hopium. Sure, if you get those flows, that'll help keep the price go up. But look what's happened recently. Now we're seeing flows into these new ETFs. A lot of it's come out of GBTC, rightly so. GBTC is still the GLD of the space. It's 27 billion or so compared to all these other ones that are a couple billion. But let's remember the facts of the number one rule for investors and money managers and private wealth funds and RIAs is the rule of compounded returns over time. Why is the world, most institutions on the planet, way underweight gold, typically maybe less than 1% of total portfolios? Why? Gold is traditional old school store of value. It does not give you a return. And the competition right now is a US T-bill of 5%. Bitcoin is digital gold, but there is no return. So we're talking about marketing this product to entities in the past that are all been focused on equities and compounded returns. And they're supposed to get over that hump that they've already passed on gold for this. Good luck. I mean, I just heard it and seen it from people in the space, but from my experience being with and at conferences and working with clients is it'll be a toy. I mean, I've always heard of toys in portfolios. It's a small part, but what's the earnings? Now, that's where Ethereum might have an advantage, but Bitcoin has no earnings, like gold has no earnings. And that's why traditional and the essence of compounding returns over time is you want earnings. My base case with the U.S. recession just starting to kick in, and as the pendulum has swung from extreme recession way over to no recession, now it just swings back a little bit. If Bitcoin can outperform in that environment, that would really change my view of this being just a risk asset that's overhyped and over inexpensive right now. But we need to see that. So my base case, to be clear, is risk assets go down this year. Gold and long bonds outperform for a typical deflationary recession, but it won't be typical because the Fed will not ease with the ease it has in my entire lifetime because the lessons of easing too much.
Grayscale's Bitcoin Trust, GBTC, moved more than 19,000 Bitcoin from its publicly known wallet Wednesday morning. Since the spot Bitcoin ETFs opened for business on January 11th, Grayscale has now moved nearly 113,000 Bitcoins from its wallet, the overwhelming majority of which was to Coinbase Prime in preparation for sale, according to data compiled. The Grayscale website Wednesday morning showed GBTC as holding roughly 523,516 Bitcoin, down about 100,000 BTC since January 11th. One caveat to the observed movement of Bitcoin out of the Grayscale wallet is that not all of that may be related to redemption. The outflows are usually split between Coinbase Prime and new GBTC custody addresses, said Arkham. This means that not all of the Bitcoin moved is being redeemed. The outflows appear to be settlements of trading activity for the previous days. GBTC has seen this massive outflow for any number of reasons, but principally as Grayscale cut its management fee just 50 basis points to 1.50% following the conversion to a spot ETF. That's more than 100 basis points higher than the other 9 competing Bitcoin ETFs. Assets under management, AUM, at Grayscale have fallen more than $1 billion each day this week. The fast pace of GBTC Bitcoin sales is among the factors putting pressure on the price of Bitcoin, which earlier this week tumbled below $40,000 to its lowest level in nearly 2 months. Bitcoin at press time was at $39,800, about flat over the past 24 hours. The hopes of Bitcoin bulls were momentarily buoyed earlier this week on a Monday CoinDesk report that the FTX estate had unloaded its 22 million shares GBTC holding. With this non-economic whale seller out of the way, the bulls hoped there might be a slowdown in GBTC exits. To this point, though, this hasn't happened, as evidenced by yesterday morning's movement of 19,000 Bitcoin to exchange. What do you think about Mike McGlone's concerns regarding Bitcoin? Is Bitcoin going to go lower as he predicts or not? Let's hear what you think in the comments section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.